The year is 2025. If you're paying attention, you can hear it. The echoes are getting louder. The same patterns, the same mistakes, the same blind confidence that came right before the greatest economic disaster in modern history. They're all around us. Most people look at the rising stock markets and they think, prosperity. But the smart money, they see something else entirely. They see 1929 all over again. When you think about the Great Depression, you probably picture breadlines and poverty. But the real story isn't what happened after the crash. It's the intoxicated delusion that led up to it. The Roaring Twenties weren't just about jazz music and flapper dresses. They were about a financial bubble so massive, so intoxicating, that an entire nation convinced itself the party would never end. Does that sound at all familiar? Here's what should terrify you. Every single major warning sign that preceded the 1929 crash is flashing bright red right now. We're talking about massive wealth inequality, wild speculative mania, credit that's way too easy to get, and desperate governments trying everything to keep the machine running, just for one more day. Let me paint you a picture of America in 1928. The stock market had been climbing for nearly a decade. Everyone, from the shoeshine boys on the street corner to the millionaires in their mansions, was playing the market. Credit was flowing like water. People were borrowing against their homes, buying stocks on margin, fully convinced that this new prosperity was permanent. Newspapers were calling it the new economy. Politicians stood on stages and promised that the old cycles of boom and bust were a thing of the past. Sound familiar? Back in the 1920s, the Federal Reserve kept interest rates artificially low to keep the party going. Banks were lending money to practically anyone with a pulse. Fast forward to today. We've just lived through more than a decade of near-zero interest rates. Money has been so cheap that entire industries have popped up that exist only because of this easy credit. Venture capital firms throw millions of dollars at companies that have never, ever turned a profit. The speculation we see in cryptocurrency makes the stock market gambling of the 1920s look conservative by comparison. And just like in 1929, anyone who dares to suggest this might end badly is dismissed. They're called a pessimist, a doomsayer who just doesn't get the new paradigm. But here's the part that should really keep you up at night. The wealth gap today is actually worse than it was in 1929. In the late 1920s, the top 1% of the population controlled about 23% of all the wealth. Today, that number has ballooned to over 32%. This incredible concentration of assets has reached levels that would have shocked even the robber barons of the Gilded Age. Now, why does this matter so much? Because the rich can only buy so many cars, so many houses, so many yachts. Real, sustainable economic growth comes from a broad, healthy middle class having money to spend on everyday goods and services. But when that middle class is drowning in debt, while the prices of assets like homes and stocks inflate far beyond their reach, the very foundation of the economy starts to crack. In 1929, ordinary Americans were leveraged to the hilt, using something called margin to buy stocks with borrowed money. When prices finally started to fall, margin calls forced a wave of mass selling, which turned a correction into a full-blown crash. Today, the leverage isn't just in the stock market, it's everywhere. Corporate debt has absolutely exploded. Government debt has exploded. Consumer debt has exploded. We're talking student loans, credit cards, mortgages that people can barely afford. The entire global system is built on one simple, dangerous assumption, that tomorrow will always be better than today. And the people in charge? They keep insisting, this time is different. Central bankers talk about soft landings and controlled inflation. Politicians get on TV and promise that just a little more spending will create endless prosperity. Tech billionaires claim their companies are worth more than entire nations because of revolutionary breakthroughs. It's the same arrogance, the same delusion, the same stubborn refusal to acknowledge a basic law of financial gravity. What goes up must, eventually, come down. But there's something that makes our situation today even more dangerous. In 1929, most Americans still had basic survival skills. Many could grow their own food, fix things when they broke, and get by without complex global systems. Today, we are utterly dependent. dependent on global supply chains that can snap in an instant, dependent on digital payment systems that run on faith, and dependent on institutions that exist only because of confidence and credit. When that confidence finally breaks, the collapse won't just be financial, it could be civilizational. The smart money already knows this. It is why you hear about billionaires quietly buying up massive tracts of farmland and building luxury bunkers in remote locations. It's why central banks are discreetly accumulating gold, the ultimate safe haven asset, while telling the public it's just a barbarous relic. The people with access to the real information, the real data, are positioning themselves for what they know is coming. Meanwhile, the general public is being fed the exact same soothing lies that calmed Americans in 1928. Everything is fine. The economy is strong. Trust the experts. Here's what those experts won't tell you. All the tools they used to fight the last crisis, the trillions in money printing, the massive bailouts, the zero interest rates, they didn't solve the underlying problems. They just kicked the can down the road, and in doing so, inflated the next bubble to be even bigger and more dangerous than the last. In 1929, the single greatest sign of danger was that stock prices had become completely disconnected from the actual underlying value of the companies they represented. Radio Corporation of America, which was the Tesla of its day, was trading at a mind-boggling 500 times its earnings. People convinced themselves that traditional valuation metrics just didn't apply to this revolutionary new technology. Sound familiar? Today, we have companies valued at hundreds of billions of dollars that have never made a meaningful profit. We have electric vehicle startups with market caps higher than legacy car makers that produce millions of vehicles. We have AI companies trading at multiples that would have been considered certifiably insane, even at the very peak of the dot-com bubble. And the justifications are always the same. This time is different. But in 1929, when reality finally reasserted itself, the fall was swift and merciless. What's truly terrifying about our current situation is that the vulnerabilities are even more extreme. In 1929, most of the wild speculation was concentrated in the stock market. Today, we have bubbles existing everywhere, all at the same time, in real estate, in the bond markets, in crypto, and in private equity. This interconnectedness makes the whole system fragile. In 1929, banks failed one by one. Today, the entire global financial system is so interwoven that a crisis anywhere can become a crisis everywhere within hours, not days. Algorithmic trading, which didn't exist back then, will amplify the crash at brutal, inhuman speeds. And unlike 1929, we don't have the luxury of starting from a sound financial foundation. The response to the last crisis loaded the system with so much debt that the next crash won't just reset valuations. It will expose the fundamental insolvency of governments that have been living far beyond their means for over a decade. The patterns are unmistakable. The timeline is accelerating. The crash is coming. The only questions left are when, how severe it will be, and which side of history you'll be on. Those who understand history have a chance to prepare. Those who ignore it will be forced to learn its lessons the hard way, just as millions did nearly a century ago. The echoes are getting louder. Are you listening? If this opened your eyes to what might really be happening behind the curtain, hit that subscribe button and ring the bell for notifications. History has the answers, and we're here to share them. Thanks for watching.